Well, hello and welcome and welcome and hello. Happy Monday. Thank you for joining us. It is un poco mas. It's Danny Vegas with you here today. Danny Deals is off with a case of general malaise, mild fatigue, and just a case of indifference. The Sofi stock moving up today about a quarter, 3.5% on pretty decent volume, guys. Of course, if the day ends in a Y here at Un Poco Mas, we want to talk with you about the Sofi stock. Ticker symbol is SOFI. Let's talk about what's going on with the stock today, guys. The stock is trading 35 million shares. First 4 hours of trading, so we're just approximately a little more than halfway through the trading day. Going into lunch on the East Coast. Want to thank J Money Not a Lurker for producing the show. I know he's on his lunch break, so if you hear him chewing in the background, please pay it no mind. But again, we wish Danny Deals a speedy recovery from his bout with everyday life. But Danny Vegas is here to sort of pound your head that earnings is 3 weeks away. We have a company that is profitable, that is growing rapidly, that has the intangibles, that tech multiple mystique that everybody likes to talk about. And then you get a valuation like this company is an absolute no-growth turd of a regional bank. It just really makes no sense. You have this sort of ungrade, I would say, from KBW. KBW on this stock, like so many of these sort of, bears, watch out for an upgrade from the Chia Pet or the Five Head. I mean, if that starts to happen, they're sucking you in. Watch out, for an upgrade from Morgan Fudley. I would, if you start to see those upgrades, I would just cover your balls. Just nothing more than that, but just just cover your balls. So Sofi, it's anybody's guess, Carl. I mean, it's not going to be a huge dramatic short squeeze. Remember, Affirm was shorted in the 30s. Carvana was 70%. They're looking at short interest right now, approximately 20%. So this is not like, going to be one of those one day, go up 50%, 40%. What they tend to do, guys, is they manipulate the stock. They get it just where they want it coming into the ER. They either sell it off very rapidly or they pump it 20%, suck people in at the top, and then they dump it. And the only way that's going to change is if institutional investment in the stock continues to increase. Yes, Kathy Wood buying 100,000 shares, 200,000 shares, here or there, but when they're basically diluting the stock every single quarter with stock-based compensation, they're making acquisitions. They just printed another 71 million shares for the convertible note deal. I mean, I don't think market makers see the sense of urgency. Yes, S&P 500 inclusion would be huge, but that's still a couple of quarters away. Why is this ER so critical? I think it's so critical because you essentially are proving that this wasn't a fluke. That you have a sophomore season. I mean, that you just weren't a rookie sensation, one time, flash in the pan, pumped it up for one ER to make a GAAP net profit. And if you look at the compensation structure of Anthony Noto and others, that just doesn't make any sense. They're looking for sustainable growth into 2026, 2027, 2028. That's how they make the big money. That's how they make the big money along with us. The problem has been in terms of holding the stock down, and, not for nothing, but I'll just make the point. This stock has been consolidating near these lows for 2 years now, okay, from April 18, 2022. So we're almost exactly 2 years. Came down here, was at these real lows down the fours for 1 year, obviously popped back up, and then has just been bleeding sideways and down ever since. Now, if you look at this chart, guys, I contend that this green line, this green trend line, the algo very, very clearly flipped that from resistance to support right here during this period of a little bit of consolidation early February. Why do I say KBW's nonsense? This nonsense downgrade on January 2nd, this New Year's surprise, this St. Douche's Day massacre. They dropped the stock from $10 down to 840 overnight, and then just shorted all the way down to $7.40. Yahtzee, where it still is today. So that's three huge dumps during this quarter for absolutely no reason. Just pure mechanics, pure manipulation. The shorts picked this stock for a reason. It had a lot of things against it. Chamath. It was a SPAC. And then you line up all the just structural, fundamental headwinds the stock faced. Being a student loan company, student loans being essentially canceled for a period of years and now forgiven and forgiven. The problem is what these shorts didn't count on was Anthony Noto, the vision he had 6 years ago. They started to execute this vision even before, the pandemic, and they continued to execute it through the pandemic, and high rates helped them grow. SoFi is able to hedge their risk because they have better management. They have a lean, cost-efficient business model, and this thing is going to be a free cash flow machine. Shorts got in on the wrong side of it, and you can't blame them for shorting this thing given where it was a couple years ago. I think a lot of smart people would say, hey, this company might not survive, but management was just too good, too effective. And look at these deals they've been making. It's not just the NFL stadium, it's not just the golf deal. The NBA deal is absolutely massive. SoFi is very, very quickly becoming a household name. It already completely is in Los Angeles, out here in California. And unfortunately for you turds, as goes California, sort of in a media kind of, organic brand recognition, that pervades, the rest of the country. And I think within the next couple of years, everybody's going to know the name SoFi. This thing's going to be a household name. It already is becoming increasingly a bigger and bigger bank. I was thinking about sort of an inherent contradiction in the Gary Gordon argument. It's like, think about what the bears argue, and then ask yourself if it makes any sense. Okay, his first article, he was arguing that you shouldn't buy SoFi. It's a strong sell. I don't understand anything about it, but it's a strong sell. Why? Because consumer banking as a business is shrinking. Consumer lending as a business is shrinking because post-pandemic, with the rate increases, things had gone down a couple percent over those couple of years. It just made absolutely no sense. And then in the next interview, he starts talking about how growth isn't good and growth is so easy. But his first criticism was that SoFi's not going to be able to grow. And then when Tanner confronts him and says, look, but they're taking market share organically from the existing players, and this market is infinitely giant. It's trillions of dollars. So if they can take market share, that's even better. You don't have to blaze a trail. It's cheaper growth. It's more effective. They just have a better business model that people are gravitating toward. And they've been very effective in raising brand recognition. And none of this sinks in with the bears, but you get these guys just, the KBWs of the world, they make just way, way, way too many calls. Way too many calls on these stocks. That's how the real manipulative turds is they're just making way too many calls. I mean, real analysts generally don't make 3 calls in between each ER. They generally don't put 3 calls. I mean, this was during maximum FUD. He's making a call every week or two. I mean, this is just not how real analysts operate. And I bet if you look at some of the other stocks that he's not manipulating, like Valley National Bank Corp, for instance. Yeah, he has 3 ratings. He has 4 ratings on this stock in the last year. Where if you look at, SoFi in the last year, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 ratings. So when you start to see these analysts rating a stock once a month, you can just discount it as complete bullshit. And this time it's an upgrade to 750. The stock's already trading up through 750. He knows it's going to continue going up through that heading into the ER. So it's basically a very strong psychological signal, don't buy. It's an ungrade. It's bullshit. But this guy chases price action. You can see at the, when the stock's trading sideways, he's a hold. At any peaks, he's a sell. So he looks like he knows what he's doing, but it's not that complicated. It's not really that complicated, how he plays this thing. So, Ashwin, who is a very, very good analyst, reiterates the buy at 11. I'm confused by Bank of America and Seaport. These hold ratings with no price targets just seems like they're getting their name on the list. Needham was again a buy at 10. So everything's been trending up, and I'm thinking about this. If you take away sort of the clown car guys, the five head, the bologna sandwich, and the chia pet, if you take away that 3 and that 4, this average becomes more like 11 because there's only a few analysts on this stock. There's only 16 ratings. So having those two clowns down below, 4, it just completely skews the data. And I think anybody making a fair assessment of this company would discount them as absolutely ridiculous. Yes, Alberto is an official analyst. What's going on? Welcome and hello. The Savage of Wall Street is here, of course, selling covered calls as he does. We're hoping this doesn't go up too rapidly just for his sake. Definitely don't want him to get called. Know your audience. Stop using words that confuse us. I hope I'm not. Let's go. SoFi. Flesh Infection is here. This is here. Joel Madsen is here. Of course, Premium of the Options. Stockman Mark is here. Good to see you guys. Carl Seamark. Macro fears, it doesn't look like, the rate cuts are coming as fast as we want them to, guys. Lee Armstrong's here. Freddie Lafitte is here. Feliz Navidad. Parker Ivy's here. M. Russo, of course. Danny Dimes is here. Was almost first. Congratulations on that, Danny Dimes. You win absolutely nothing. Parker Ivy is a turd reporting for duty. Aren't we all, Parker? Welcome and hello, guys. Hello and welcome. I would like to thank Alberto Berti Aviles for being so active on the comments. But again, these analysts are manipulating the starting line. If they can convince you the stock is a hold at 750, if they have another great ER, the stock runs 20%, that's only 9. They short it, they sell it off from 9, they rinse, repeat. They're trying to win a war of attrition. They're not shaking out the hardcore people. They're not shaking out, but this thing is not priced reasonably. Why do I expect, another huge run? Basically, this stock likes to leg up, basically 80 to 120% in the course of a month. It did it right here, a little over a year ago at New Year's. It did it right here. This was actually, even more than that last May. Made another run here, another huge run here from 683 to 1030. And again, that was, 5 weeks. So, I don't know if you believe in wedges. I don't know if you believe in dreams. I don't know if you believe in fairy tales, but something's coming to a head right here. And if you look at where these two lines meet, where 730 kind of meets this descending upper bound line, it's right at earnings. So given the sandbagging that Nodo does, given that analysts are starting to pump, you have to expect another 20% pump and dump. Why would they change that? It's been so gosh darn effective. Look at the last earnings here. Immediately, they started out at 760, exactly where we are right now. Pumped the stock up to the, 9s, and then immediately sold it back off to 760. It's like 2 days, 3 days. I mean, they made a ton of money on retail. It's not just the calls. It's not just the calls. I mean, it's the pump and dump itself. If they're, sucking retail in at 9 and getting them to sell at 740 in 3 days, the profits, the market makers are just astonishing, guys. Oh, filtered tap water, yes. Hey, Beach Boy, how's it going? Yeah, Alberto is fine. He's very, very active. 68 people watching. Congratulations. One more and you win the booby, 69 booby prize. Wash your hands immediately. Welcome and hello, guys. Thank you for joining us. Sorry this is a little bit incoherent. I got my phone, I got email, I've got a few things I'm trying to watch, but I've also taken a quick look at my notes. Welcome and hello. Hello and welcome. Let's just see where we are, get you a check of the live short interest. We're sort of hanging on that upper bound of those 750 calls where they're basically still worthless until, a little bit higher. So nobody's going to be exercising them at this point on Monday. I often say, guys, in fact, I always say like a broken record, if you're going to buy short-term calls, which you never should, dump them at the high on Monday, because this is usually with this stock is as good as it gets. Yeah, Alberto, we should. I mean, Morningstar has a fair value of 13. All the smart people are at 13. I mean, if you really start to even just look at these analysts, like Ashwin is kind of low at 11. Pareto's a balding clown. This Needham guy at 10. But anybody who's anybody has this thing worth at least 10. I mean, Jeffrey's at 12, the bologna sandwich in there at 4, then Truist at 14. Kevin Barker, I think, is part of the evil access of FUD. He seems to want to move the stock around, but BMO, I think, is bearish. They're at 9. JP Morgan, really kind of in that FUD camp at 10. Barclays at 10. Goldman sucks. Look at their Marcus product. It's absolute dog shit, but Bank of America was at 950. They're still at a hold, so, 950, guys, on this stock is 24% upside, so that is not insignificant. Boobs take Alberto way back. He's lactose intolerant now, so those were the days for him. Savage of Wall Street, is he getting out of line? Lopez wants SoFi to go up fast, roll and roll. Yeah, no, I know you got it covered, Savage. I'm just saying you're selling a lot of covered calls, so you're absolutely not unhappy if it just moves sideways. But yeah, I'm sure you know how to roll your options, buddy. But generally speaking, those people selling a lot of options want a stock to move more sideways or increase a little bit slower. If you're selling a lot of covered calls, you generally don't want a stock to just absolutely explode to the upside. And you wouldn't expect SoFi to do that, prior to earnings, but you really don't know. Market makers can move this thing anytime they want. And this was kind of my point with talking about Robinhood. I mean, Robinhood just moved from $10.50 to over $20 in, 6 weeks. That's the kind of move we're looking for in SoFi, but not in as steep as we're looking for it. Now, if you look at Robinhood, I do understand they only have, about $3 billion debt. They have a lot of cash. So I'm not saying it's a bad company, but if you look at their annual revenues, guys, I mean, 1 billion, 1.8, 1.3, back to 1.8 over the last 4 quarters, growth has been flat or down. They made $30 million last quarter, lost 85. Just 4 quarters ago, lost $500 million. So, I mean, you ask, what's the difference? Why is this? Why is Robinhood, besides being tech, besides probably their eventual margins, possibly, if they were to ever get there, being a little bit stronger than SoFi, but this company is far more susceptible to volatility than SoFi. The history, the numbers absolutely prove it. Why are they going up? Why did they make this run? It's very simple, because market makers wanted it to make this run. 8% held by insiders, 78% held by institutions. If you look at this number for SoFi, which is fundamentally a superior company, 37%. 37%. Way under half the institutional ownership of Hood. Hood is a tool of these big banks. I'm telling you guys, Hood is a tool of the hedge funds. I think it's very, very telling that some of these competing institutions absolutely hate SoFi and are willing to hurt SoFi at all costs. I mean, look at this short. They're actually paying companies to short SoFi. Cost to borrow min, negative. Cost to borrow max, only 4. On a company that's this heavily shorted, still 3.4 million shares available. They're borrowing 16.5 million shares net today. Okay, Friday they borrowed 2 million. Short interest is still around 20%. We have less than 3 weeks to the ER. I'm expecting a blowout, guys, especially at the top line. Bottom line, I don't know exactly what's going to be in there. Management has, going to keep a few things up their sleeve. So, and a lot of people are speculating, was all the information, was all the basically interest savings from the offering baked into guidance last quarter, because they haven't really amended guidance. And, they don't tend to come out and actually give a formal guidance pre-ER, but oftentimes there's one of these conferences where they'll basically reiterate, nudge, nudge, wink, wink, we are going to make a profit. And so far, management is saying all the right things, that they're going to be profitable again this quarter. They've been pretty much unequivocal on that. How's it going, guys? Welcome and hello and welcome. I'm going to bail out of this thing. I'm just going to try to keep these things much shorter. Sheenus, I would think so. A lot of institutions were buying in at 10. A lot of them were buying in above 10. If you look at institutional ownership on the stock, obviously Vanguard has about 82 million shares, but there's more institutions buying in, all the time. That yes, there's some sales, but there's far more positive increases in new positions. So you can see a steady increase in, smart money coming into the stock. It reached sort of this low point here back in mid 2023. And then, you see institutional ownership continuing to, slowly but steadily increase into a big short. It's just odd. You think if there's something fundamentally wrong with the stock, institutions would be getting out, wouldn't they? Why would they be buying this offering that they need to get the stock to, $12 to make it pay if this thing is a scam, if this thing is a SPAC scam, what they're saying? Reality flies in the face of what these turd shorts are telling you. Even like I said, even the Chia Pet raised his EPS for Q4 2025 a couple days ago. It gets no press. But analysts are really behind this company. The fact that the institutional ownership is still so low makes no sense given the profit, given the growth, given the intangibles. A lot of people say they see SoFi as a threat. I don't know if that's the case. Their sales are so low. I don't know if mega banks see them as a threat, but I think mega banks definitely see them as a buyout candidate that they like to get cheap, and Noto doesn't want to sell it cheap. But I've already talked about, guys, let's see, anything else interesting here to show you? Let's see, let's see what these guys are showing on the short interest here on Fintel. So they're still showing 210 million shares short off exchange. So yeah, they're a bit higher than Ortex. Ortex is a bit more reactive. They haven't been extremely accurate on SoFi. They've been really behind the curve to the downside. But let's take a look at Max Payne this week. 750 again, there's the open interest and there's the volume. So you have, again, a lot of tremendous amount of calls coming in at $8, which I just hate to see because that gives, obviously the smart money who's selling most of those options along with Savage Wall Street every incentive to, hold the stock under that level. But I don't think anybody was necessarily expecting the stock to run up through 8 this week, but I wouldn't be at all surprised if the stock moves up into the mid-8s ahead of the ER. I think the ER is going to be really, really strong to the top line. I think we're going to see growth. I think we're going to see membership growth that's going to surprise people. I think a lot of this stuff is reaching critical mass where SoFi is not having to spend as much to gain these customers. Everybody knows who SoFi is. They're getting those, high-value, young, affluent customers that everyone else wants. And SoFi is the only company making it work. Be like, well, American Express, Discover, Axos, many of these online banks pay the same interest rates as SoFi does, but they're not growing deposits nearly as fast. And the only conclusion you can draw is that, people like SoFi's product. I really think that's the truth fundamentally, is that people like the product. It's very easy to use. It's very effective. Almost everything is free. Robinhood and SoFi, I think many people are customers of both, but they both have, they both have their place. I think for long-term investment, I would rather have SoFi savers ahead of Robinhood's traders, because I think Robinhood's business is honestly somewhat fleeting. I think that's why they're trying to get into banking. That's why they're trying to get into credit cards, because this payment for order flow scam isn't going to last forever. They're basically selling your data and using it against you. Robinhood is not a pro-consumer company. How quickly people forget what happened. KBW, we talked about their fake price targets, the head fakes. Expect it to run up. If they can keep it at 750, then running up to 20% would only be $9, and that's far less than this stock is actually worth. So we talked about Robinhood. I would say the same with Palantir. I mean, SoFi is growing as fast or faster than Palantir. I know Palantir eventually will have software margins. They're talking about how they're going to be everywhere in AI. I know Kathy Wood's talking about it, but right now, for the real world, SoFi has a real business that really makes money and is growing, 25, 30% every single year, and they're going to grow into those EBITDA numbers, and that's going to be coming down to the bottom line. This company is going to be a free cash flow machine, because as they add members, as they add clients, they do not add a lot of marginal cost. It's basics here, guys. It's basics. Hello, Maria Powell. Hello, Gary Gordon. Hello, Crazy Tanner X. We have trolls joining the party. Recovered penny chaser, 10 plus up to earnings. I'm still not recovered. I'm still chasing penny stocks, unfortunately. Hello and welcome, David Redliner. Premium of the option. Hello and welcome. Not a lurker. Nobody's selling. You're absolutely right. How short are you, Danny D's? No, I'm 6 foot tall, Alberto. A lean, mean. No, not really lean and mean, but no, I'm 6 foot tall. Cleon, Crumpitus, Shanus, Sumas, good place. Yeah, we already got through those comments, guys. I have to bid you adieu. I just have too much work to do today. But SoFi holding very steady right now at that sort of 766 level, topping out where 750 calls would pay. But of course, people aren't smart enough to get out of those calls. There is a pretty high volume of calls here at 750 call here. Yeah, so 13,000 contracts, an insane 23,000 contracts at 8. I don't see why people think, I guess they're hoping for favorable data. I don't see why they think this thing's going to shoot past 8 this week. But, that's just me. I would be selling calls, not buying calls, and that goes almost all the time. So you guys know better than me. Anyway, guys, that's the SoFi stock. Let me get you one final check of the live short interest, see if anything has changed over there. And no, still 16.5 million shares net borrowed on the day. Still cost to borrow extremely low. So you guys are going to have to decide what to make of it. But I think the stock is going to push up significantly on another solid ER, and I think that's going to convince a lot of market makers to come into the stock who thought maybe it was a fluke last quarter. That's my theory, guys. Tell me what you think in the comments. Hope everybody has a great Monday. Appreciate you joining me. It's Un Poco Moss. Thank you to J Money Not a Lurker. Thank you guys for joining me. Peace.